Welcome back to the second part of Where is your next trade? In this video, we'll be looking at how to quickly generate winning trades based on news or macro views. So this is very similar to the first part of this video series, where we looked mostly at how to generate those trades based on countries ETF. In the following slides, we will be looking at how to do it on the company's level. First, as we discussed in the previous video, there will be almost one ETF for any country. So as we can see here, those are the ETFs, the SPY, the USU, the FXI, or EWZ for Brazil, are denominated in US dollar, will be listed in the US, and they allow investors to diversify their exposure, or as an investor, we could be taking directional bets, let's say long or short China with the FXI based on macro views, or let's say short Russia, if based on geopolitical news, like we got recently with the Ukraine crisis, or betting, as we've seen before, on the Brazilian elections coming in October 2022, or finally do a pair trade by generating alpha by going long one country versus going short another one. So that was the one that we used when we were long Spain and short the Eurozone. As we have plenty of ETFs, and we could limit ourselves to this level of research. So in other words, we could be quite lazy, but I think now what we should be doing is to go into the next level of filtering down in our process. So what about we go into the next level of drilling down for ID generation by looking at the company's level? So again, similar to what we've done in the past, GDP growth, looking at the 5 big regions, the US, China, Eurozone, Japan, and the UK, we will get 60 to 65% of the world GDP. But as we can see here, by putting China aside, which is in orange, everything seems to be trending the same way, where the GDPs will be following similar trend, but with some deltas between them. From this macro picture, and with the help of other macro indicators like the leading indicators, and I'm thinking about the PMIs, I'm thinking about the US ISM in the US, we could choose a more advanced and more active investment process. So the way to do it is to be looking at more active investment. Passive investment is great, but we know that we could potentially have higher returns with more active investment. So we try here to be generating even more alpha. So to do so, we will have to filter down from the country level to the company's level. What needs to be searched and done are listing the sales per regions or countries of the different companies in our investment universe. So if you'll be following stocks in the US, roughly 2,000 to 2,500 stocks that have more than 2 billion market cap, you'll try to find the companies and see where they are selling. You could do the same in Europe, looking at the stock 600, or you could do the same in Asia or Asia, Australia. From my experience over the last 20 years, trading short-term, mid-term, long-term, that is honestly one of the easiest trades and the more rewarding. Why? Because very often investors will be very lazy. So when they get the news on Brazil, when they get the news on Spain, they will go to the index, but they will not necessarily be looking at the specific of any companies. So you will have huge opportunities if you already done your job of preparing those lists. So what we really need to do is have those lists ready. So this list, those trades are based on 2 things. They are based on the global macro picture, as we've seen in the past. How are the different regions growing or not growing? So we'll be looking again at splitting the GDP by percentage, looking at the US, looking at Europe, looking at Asia, and that will give us some trend and how those different regions will be trending. And then we should be looking at, well, on a more detailed level, looking at the specific country's catalysts. So what are the next catalysts coming for any country, and if we have some. So that could be elections. So I'm thinking, in France, you got elections coming in the next 3 months. As I said before, you got elections coming in Brazil, you got elections coming in Korea. You could have tensions coming, geopolitical tensions, that could be war, like as we've seen with Ukraine and Russia. You could have one region that has been struggling, which was the case, when we had the Arabic countries that were struggling a few years ago. You could have new regulation that is changing the rules for a country. And if it's not regulation, that could be new taxes that are applied to a country. For instance, today, Singapore has been announcing new taxes on different levels, or that could be things like similar to a currency devaluation. And here I'm thinking about the recent news about the Turkish economy, which has been really struggling, where the Turkish lira has been really coming down massively versus the US dollar. So here, let me give you first an example looking at Bud, which is listed in the US, but is as well listed in the Netherlands. So as a European investor, what you will do is you could have exposure to this company, which has 12.5% sales in Brazil by trading the Dutch line, which is denominated in euro. But the beauty of those stocks is you have a Bud that is as well trading in the US through an ADR. And here the idea is to have exposure to a stock, to a company that has more than 10% of its sale in Brazil. So in that chart, so you could see the correlation between, in orange, the performance of Bud, the stock, and the ETF of Brazil, which is EWZ. So there is a massive correlation. But if you want to have the list of companies listed in the US or Europe that have exposure to Brazil, it is pretty obvious that you need to do it before. And when you want to have exposure to them, or you want to have exposure to emerging market, or you want to generate alpha, having a list like this one based on which companies are having sales in Brazil could be extremely helpful. And as I said in the previous video, you get an obvious catalyst coming into October of this year in Brazil with the presidential election. So one way of playing it could be the EWZ ETF, and on the other hand, that could be playing Bud, as you might be thinking that those elections will work pretty much as a catalyst. Second example, which is Carlsberg. So we are in the beer section. I wanted to do a beer section based on the world reopening. So Carlsberg recently announced that 85% of the pubs and the bars reopen. And that, I think that was quite funny to have something very similar. So Carlsberg is listed in Copenhagen, but as well, there is an ADR listed in the US. So if you are in Europe, if you want to have exposure, you could be buying or selling the Danish line, which is trading in krona, or as an American investor, if you just want to have a US listed stock, which is US denominated, you could do the same and buying or selling the US ADR. So what are we looking at here? We are looking at a stock that at the start of this week, on Monday, when the tensions between Ukraine and Russia were at its max, at least short term, the stock went down by 7% and massively underperformed the market. So the market overall in Europe was down 3%. So it underperformed the market by 4%. Why? Because 12% of the sales of Carlsberg are done in Russia. So by definition, if you have such a catalyst as the Ukraine-Russia tensions or potential war, the stocks that have the companies that have exposure to that regions will be underperforming the overall market on that day. So if you're thinking about a catalyst on the country, or if you see one headline and you have already your list of stocks that have exposure to that region, obviously that helps a lot to generate a quick winning trade. So what are the trades? The first trade is obviously going long the company that has good regional exposure versus a short company that has a bad regional exposure. And you could do that on a pair trade level or a basket of companies. So typically what you will be doing is picking two companies in similar industries, and let's say going long the company which has 60% exposure to US and 40% exposure to Europe, and going short against that the company that has 60% exposure to Europe and 40% exposure to US, if you think that the US will be outperforming Europe. The second point is, if you, after having identified growth trends per regions, you should go overweight companies with existing presence in outperforming regions. So that is a very similar concept to the first one, but mostly that is for long only people, but people that just want to be long the market, or people that want to outperform the overall index. So that is more for alpha generation. So typically what you could do is you could go long a basket of companies or go long 2 or 3 companies, and you do that versus the index because you think that you're going to be generating alpha. The third point is finding the companies that are growing in the right regions. And here, this is the whole target of these videos. This is doing a filtering by countries. So what you really need to have is building your infrastructure. And I know how demanding that could be for retail traders and for all of us, but you need to have this list ready. For instance, be able to quickly get companies that will have exposure to Brazil with the elections, for the Turkish market with the European banks that have exposure to Turkey, or with Russia, with the Ukraine-Russia conflicts and so on. That is extremely helpful. And finally, the trade that works by definition very well is taking directional bet on those companies which have significant exposure based on those geopolitical events or specific catalysts. So clearly, again, I know that some of you are struggling with finding catalysts. Those ones are extremely easy because any country will have specific events on any point in time. So those are for the expected events. And as well, you can have some unexpected things that could be happening during the year. And in that case, you should be able to quickly pull the trigger and knowing where the companies are based and where they have exposure, more importantly. So here, this is a quick screening on the different countries where I give you the example with the percentage of sales that are in Russia. As we can see that, for instance, Arconic listed in the US got almost 10% exposure to Russia, PepsiCo 4%, Mohawk is 4% in Russia. And similarly, if you look at Brazil at the bottom, Mosaic, FMC, Ball, Bunge, so many companies that have exposure to Brazil will be agricultural companies by definition, because agriculture in Brazil is very big. So you'll have, if you want to have a view on agriculture, if you want to have a view on how the Brazilian economy will do in the futures, you could be playing those names. So clearly, having your list ready help a lot. Where do you get this information? That is pretty simple. Either you go on the company's website, and that is even more true for US companies where their investor relations website will be very, very good. Or you can go on the SEC website, and here you'll be looking at the 10K. So here, this is the example for PepsiCo that we just mentioned. We are looking at the sales for PepsiCo in Russia in 2021, 2020, and 2019. Or you could be looking at financial websites. So there are some very good financial websites where you could be collecting the data. So when I built the 4x4 video series, I decided to put aside the Bloomberg, to put aside the Reuters icon, to put everything on the side and say, okay, what can a retail trader do? And my level of macro and Excel is, let's say, average minus, but I still managed to pick up information, to collect data, to do data fishing from several free websites and build those watch lists, those data lists where I got all the companies that have exposure by region. So if I can do it, in other words, almost anyone can do it. Otherwise, if you are a more advanced trader, what you should be building is building on an Excel spreadsheet with the API from Bloomberg or a Metastock icon, all the companies where they are selling by regions, what have been the trends, and you need to look at those trends versus your global picture or versus a specific event. So over the years, trust me, trading the country catalyst has been very productive and successful. I think that is what you will realize is when you put when you commit to the market, when you work hard, you will see that you will be having a nice payout. What has been happening is when you trade Europe, that is something that you naturally do, as you will be trading companies with different country exposure and potentially even different currencies. When you are trading only the stocks listed in the US, that should be exactly the same, because as we've seen in the first few slides and in the previous video, 40% of the S&P 500 companies have exposure outside of the US. So don't get the mistake of saying, oh, I want to be long the US, so I'm buying S&P companies. If you want to be long the US, you should rather be more Russell 2000, Russell 3000, which are smaller companies, which have more exposure to the US. So what you need to do, and this is again something that I've been doing for years, is have those filters ready. This is an easy way to generate ID. Every single month, you'll have a specific event in one country of the world. Either you can do the ETF, as we've seen in the first part of this video series, or you can even do better by generating alpha and finding the companies that have exposure to those specific countries. Very often, the market is slow to react and will be taking a couple of days. So the first reaction will be the ETF will be selling, then people will think, okay, which companies that has exposure to those countries, and then they will be underperforming the market. So I hope you enjoyed those two videos on how to generate winning trades based on sales per regions. I hope it helps, and I see you soon. Bye-bye.